And Procter & Gamble's out with first quarter results that we just brought to you a few minutes ago. Join us now to break down the report. Procter & Gamble CEO Jon Moeller. It's good to see you, John. This is being characterized that the sales, they're calling it, I guess, a slip. It was your sales in the quarter were 21,741, and last year it was 21,871. So it is down and a little bit below expectations, but you confirmed sales guidance for the entire year. So that is being looked as a positive. I guess, would you say some people expected some weakness from China in the sales number? Because the stock's up. It doesn't look like a big surprise.
Yeah, well, there's a lot going on in the all-in sales number between FX and other things within the quarter. But as you said, we're very much on track to deliver against our expectations for the year. We take a lot of encouragement away from the results this quarter. 2% organic sales growth on top of 7% quarter year ago, so 9% 2-year stacked. Earnings, core earnings per share up 5%. Comps a plus 17% in the base, so plus 22, plus 29. Plus 9, plus 22 over that 5-quarter period is pretty good. The results were very much in line with the quarterly cadence that we communicated to the street. And they keep us, as you've said a couple times, well on track to deliver against our fiscal year estimates on both the top and bottom line. A couple questions and answers within all of that, because there is a lot going on. The biggest question has been, can you maintain unit volume growth at higher prices, which you've had to move to as a result of commodity costs, in the big developed markets? North America volume growth in the quarter that we just completed, plus 4%. Volume share growth in North America, 8 out of 10 categories. If we look over the last 5 quarters, average volume growth of 3 to 4%. Europe in the quarter we just completed, plus 4% volume growth. Average over the last 5 quarters, a little over 3%. So the resounding answer to that question is yes, we can grow unit volume at the current price levels and can do it very attractively. Second question that's related, can you do that and maintain build margin? We held core gross margin year on year. We built core operating margin by 30 basis points, and that's including 40 basis points of additional investment in the business. Last question, I promise, then it's back to you.
No.
Are you where you expect to be, or where you would have expected to be, in China and in the Middle East and related countries? We're somewhat behind where we expected to be. I just got back from 4 days in China on Wednesday night. It's a difficult environment, consumer, customer, competitor, but we've got a very energized team that's focused on the right endpoints in the right way, and there's some real interesting signs of progress. For example, Pantene just took over share leadership on e-commerce and shampoo. Pampers baby diapers up 5% from a sales standpoint in a market that's down 10%. SK-II, the largest selling brand during the Chinese Valentine's Day period. I had the opportunity to tour a club store, Sam's Club store, with the CEO of Walmart and Sam's in China. Looked great. We spent time together over lunch. Our business in that under that banner up strong triple digits. Still work to do, but I leave more excited than when I went. We'll see what happens with some of the recent policy moves, and of course some of this will eventually annualize.
John, are you still raising prices when you get a chance? Inflation has come down. We the Fed, whatever you want to attribute it to, making a lot of progress there, but still rising, core still rising more probably than the Fed would like. So I wouldn't imagine that you have actually lowered any prices below where they were, let's say, a year ago. Have you ever actually, have any prices come down in any of your businesses?
It depends on the reference point. Certainly, since this commodity cycle started, there aren't many examples of price reductions. We've needed to take some price increases in order to maintain economic viability of the business. But the only context in which I see, or the primary context in which I see pricing occurring currently, is consistent with our historical past. I'm talking decades. That is when we bring new innovation to the market that offers performance benefits which are value accretive. And the second is to price for big swings in currencies, primarily in developing markets. But it's not as we sit here today, it's not a huge part of the landscape.